After making a comeback in the latter half of October, accepted volumes plummeted the first week of November, falling 8% from October 31st to November 4th. Jobless claims remained unchanged as last week's claims were revised down by 1,000 from 218 to 217,000. Claims on average for the month of October coming in at 219,000 on average. That's about 61,000 less than reported at the end of October 2021 and 554,000 less than back at the end of October 2020. DAT trend lines signaling spot load and truck post increases of 2.5% and 5.7% respectively on a week-over-week basis as shippers pushed out a glut of seasonal items. Spot load posts 10% less than what we saw back in September and almost 52% less than where we sat back in October 2021. Truck posts on both a month-over-month and year-over-year level continue to show growth, further evidence of an increasing supply and demand imbalance. As bookings have remained below pre-pandemic levels consistently for over a month, maritime carriers have begun upping their blank sailings. Typically, when demand is low, carriers will start implementing blank sailings, essentially skipping a port or avoiding an entire sailing completely. Blank sailings are not a new concept, but have become more common during the pandemic era as ships would skip congested ports or be forced to void a string completely if dwell times became too long. Blank sailings can create a supply and demand imbalance in this circumstance, exponentially increasing shipping costs while simultaneously padding ocean carrier margins. In an effort to slow diminishing returns, carriers have announced a 14% cancellation rate for scheduled sailings between weeks 45 and 49. The 14% represents 100 canceled sailings across the Trans-Pacific, Transatlantic, Asia-North Europe, and Mediterranean. During this time frame, 56% of the blanks will occur on the Trans-Pacific eastbound and 20% on the Transatlantic westbound route. According to Drewry's weekly analysis, two major concerns regarding freight movements remain: possible U.S. rail disruptions and potential new Chinese lockdowns. To quote Drury on these topics, in China, the authorities have ordered mass testing in the Yangpu district, Shanghai, which could lead to another painful lockdown, as happened last summer, where disruptions continued for 2 months. Similarly, in the U.S., the possibility of further rail disruptions are a growing concern, with two unions already rejecting a tentative settlement agreement in September and a further 4 voting before the end of November. Shippers and BCOs should remain alert as the COVID situation in China and possible rail disruptions in the U.S. could cause further operational difficulties, impacting the flow of cargo between China and the U.S. This has been your Bridge Logistics market update for the week of November 7th, 2022.